The economy of Taiwan is a highly developed free market economy. It is the 8th largest in Asia and 20th largest in the world by purchasing power parity, allowing Taiwan to be included in the advanced economies group by the International Monetary Fund. Taiwan is notable for its rapid economic development from an agriculture-based society to an industrialized, high-income country. This economic growth has been described as the Taiwan Miracle. It is gauged in the high-income economies group by the World Bank. Taiwan is one of the most technologically advanced computer microchip and high-tech electronics industry makers in the world. Throughout its history, Taiwan has experienced periods of economic boom and bust. Several centuries ago, the island was a major trading center in East Asia, and it prospered. Taiwan grew economically under Dutch rule in the mid-1600s and in the late 1800s under Chinese rule. It did well economically as a colony of Japan from 1895 to 1945, but experienced a decline in the years immediately after World War II. In the late 1940s and early 1950s, many economists regarded Taiwan's economic situation with considerable pessimism. That assessment was based on Taiwan's unfavorable land-to-population ratio, its lack of natural resources, a shortage of capital, and a discredited government. However, that perception did not turn out to be true. Taiwan's economic growth beginning in the mid-1960s was so spectacular that it acquired the appellation economic miracle. Taiwan's economic boom of the 1960s, and for several decades after, was preceded by land reform, which generated a marked growth in the agriculture sector. Rural prosperity stimulated industrial development, while more efficient farming released labor for Taiwan's industrialization, which drove the economy in the 1960s and 70s. In the 1980s, Taiwan moved to capital-intensive and knowledge-based industries. A high rate of savings, rising labor productivity, privatization, astute government planning, considerable foreign investment, and trade all propelled Taiwan's rapid economic expansion. In the 1990s, Taiwan's economy slowed, but its growth remained good, even during the East Asian financial crisis of 1997. In 2001, Taiwan experienced a recession, mainly caused by political paralysis. Its economy again underwent a downturn, beginning in 2008 with the global recession, from which it recovered only slowly. Economic outlook. As of 2021, the 3 highest-paid sectors in Taiwan include telecommunication services, financial services, and information services. The economy of Taiwan ranked the highest in Asia in the 2015 Global Entrepreneurship Index, GEI. With technocracy-centered economic planning until 1987, real growth in GDP has averaged about 8% during the past 3 decades. Exports have grown since World War II, with inflation and unemployment staying low, and foreign reserves being the world's 4th largest. Taiwan now faces many of the same economic issues as other developed economies. With the prospect of continued relocation of labor-intensive industries to economies with cheaper workforces, such as China, the Philippines, and Vietnam, Taiwan's future development will have to rely on further transformation to a high-technology and service-oriented economy. In recent years, Taiwan has successfully diversified its trade markets, cutting its share of exports to the United States from 49% in 1984 to 20% in 2002. Taiwan's dependence on the United States should continue to decrease as its exports to Southeast Asia and mainland China grow, and its efforts to develop European markets produce results. Taiwan's accession to the WTO and its desire to become an Asia-Pacific regional operations center are spurring further economic liberalization. The economy of Taiwan is facing economic marginalization in the world economy, de-internationalization, and lower salaries. This results in human resource talents seeking career opportunities elsewhere. Businesses in Taiwan suffer most from being the size of small and medium enterprises, which impedes attempts at economic transformation in Taiwan by the Taiwanese government. By far, the leading proxy of Taiwan's manufacturing success is the chipmaker TSMC, which controls 54% of the $84.6 billion global semiconductor market. As a contract manufacturer, TSMC supplies high-end semiconductors to industry giants like Apple, Qualcomm, and MediaTek. Since last year's pandemic, there has been an acute shortage of integrated chips that was worsened in 2021 by pent-up demand for consumer goods amid the reopening of the economies in the United States and Europe. For a company as important as TSMC, it is useful to get a macro perspective of the relative significance of TSMC to Taiwan's economy. In 2020, TSMC saw its revenues rise 25.2% to 1.3 trillion new Taiwan dollars. Just making a rough assumption that most of that revenue is generated from abroad, it represents 58% of Taiwan's electrical and electronic exports in 2020. Moreover, following a 60% surge in TSMC's stock price in 2020, its market capitalization expanded to 13.7 trillion new Taiwan dollars. Compared to Taiwan's GDP of 9.6 trillion new Taiwan dollars, TSMC's market value is nearly half the size of the economy. Strategic timing depends on the economic trajectory. Looking ahead, the future of Taiwan's economy and the health of its semiconductor industry depends indirectly on the stability of U.S.-China relations, based on a long-standing mutual agreement that Washington sticks to its One China policy, while China continues to poke Taiwan. As mentioned, the mutual understanding is being tested by the escalation of a new Cold War since 2017. During that period, Taiwan's GDP per capita would be around just 1 to 1.5 times larger than China's, instead of the present 3.8 times at $29,541 versus China's $10,484. From an economics and optics perspective, China would not wish to be seen to be taking over Taiwan as an economic prize instead of reclaiming it purely as its rightful sovereign territory. By the same token, in a decade, China's semiconductor capabilities may be able to narrow the technology gap with Taiwan. Whatever the outcome of the rivalry in the semiconductor industry, Taiwan's position as a leading player is expected to significantly impact the industry and the geopolitics of the region in the years ahead. So, what do you think? Will Taiwan remain the richest economy in Asia even after a war with China? How did we do? If we missed something, please say in the comments. And if you like this video, please give a thumbs up and subscribe to our channel.